Hey everybody, it's your favorite mortgage broker, Bryce the Broker, coming in. I'm in like a radio DJ. Actually, no, I just wanted to give you guys a market update in terms of the trends and stats and figures of what is going on in the mortgage industry. As you can see, this information is coming from Ellie Mae's September 2018 Origination Insight Report. I get this insight report every single month because it really lets me see what a lot of the big lenders and kind of what the industry as a whole is doing, and I'm going to show you guys what I am doing and basically and how I am able to stay competitive in this environment. So if we go down here to the first page, you'll see the monthly origination overview for closed loans. The trend that I am seeing right here is basically right in there. Notice last year the ratio was in the 60s to 30s. Now with interest rates increasing, we see a pretty big jump in terms of the overall purchase market taking a lot more of the total loans being originated, which makes sense. There's less incentive to refinance when interest rates go up. The other thing that draws my attention down here is the type of loan. Right now, 65% of all loans being originated are conventional loans, which are your Fannie Mae, Freddie Mac, jumbo mortgages. 20% of the loans out there being originated are FHA. 10% of the loans out there are VA. And you can see, though, historically, that ratio has held steady for the last year or two. Next page here is the monthly origination overview for closed loans. Now this one I'm always in shock when I take a look at, because you can see for all loans that are out there, we are currently seeing an average of 44 days to close a loan, which to me is absolutely insane. That means there are way too many people going to companies like Chase and Wells Fargo and Bank of America, and even Loan Depot and Quicken, and just waiting and waiting and waiting and waiting, and not closing on their loan. We can see it's not even really dependent on the type of loan. FHA loans, conventional loans, even VA loans are all in that 40 to 50 day closing range, and that's simply because clients are just going along with it and being told over and over again that this is all normal and this is what to expect, because they have not found a lender that is willing and able to get their loan closed in the 15, 20, 25 day time frames that are possible right now in the mortgage market. Going on to the next options here. So this is why on the first slide we saw refinance percentages going down. You can see the beginning of the year interest rates were in the low fours, and now they've steadily climbed throughout the year. It looks like we are going to be going into a 5% interest rate market some point in 2019. It may happen before the end of this year, but I do expect, kind of along with all the economists that are out there, we are going to see 5% interest rates again for the first time in over 7 years. The other thing that jumps out at me on this one is if you go back about a year and a half ago, notice the difference in interest rates between FHA and conventional. Notice the difference in interest rates now. I don't think this has anything to do with changes made by the FHA. I think this is just lenders taking a high profit margin mortgage and being less competitive, because more often than not, we'll see in a couple slides how FHA has more of those mid 600 FICO score borrowers, and instead of being really competitive with the interest rate as a result, they are starting to squeeze that a bit more. And I think ultimately the reason why is because they want to start them out with FHA and eventually drive them over into a conventional loan with either reduced or no mortgage insurance. Going into the next option here, this one gets me even more kind of flabbergasted than the first one that we saw. This one is the percentage of loans closed. So they call it the closing rate. And the big thing that just jumps out to me is that over the last year and a half, the percentage of purchases that successfully close has never exceeded 77%, which means 1 out of every 4 to 1 out of every 5 purchase mortgage applications do not close. This is one of the primary reasons why you'd always want to trust a purchase transaction to a mortgage broker as opposed to a bank or a mortgage bank. One of the things about a bank or a mortgage bank is they only have one place to lend money from, and that is the institution themselves. Mortgage bankers are employees. They work for one company. They follow that company's lending guidelines to a T, otherwise they can't do the loan. Mortgage brokers, on the other hand, work with multiple lenders. So if one lender is saying, sorry, we can't do the loan or we have to decline it, there's 15, 20, 35 or 50 other lenders right behind there that the mortgage broker has a relationship with, a business relationship, not an employee relationship, but a business relationship with, so that they can find the best loan for that client. Here is the credit score distribution. Again, the main highlight on this one that I would point out for you. And again, I think one of the reasons that we're seeing increases in the FHA average interest rate closing is basically right in here. So over in a conventional loan, 40%, and basically over half if you include these 800 plus guys as well, over half of conventional loans are closing with a 750 credit score or higher, whereas the bulk of FHA loans are closing right in that 600 to 700 range, with a couple people, above 700, as well as any hope for closing a loan if you're under 600 credit score. Pretty much that lies just with FHA. And then this one here, not as valuable information because it's just kind of summarizing everything together for FHA, conventional, and VA loans, but it's got average credit score, average loan to value ratio, as well as average debt to income ratio. Because this is not broken down, I don't really pay a lot of attention to this one. There's not a ton of useful information. This one, however, because it breaks it down by both transaction type as well as by loan type, in this case here we're looking at FHA loans, you can see average FHA credit score now is down to about 677, right in there, and that most people are still putting in that 3 to 5% down payment, and then coming in really near the maximum on the debt to income ratio at a 29.44 debt to income ratio on an FHA purchase. When you compare that to conventional loans, the conventional credit score significantly higher, down payment is significantly higher, and those all result in debt to income ratios being lower as well. Big thing is that these are just averages. There's a ton of people out there still putting 20% down, but with a conventional loan, it is not required. There are dozens of lenders out there that will let you put sometimes as little as 1 or 3 or 5% down when you're doing the purchase. And with a good credit score, you can get very, very reasonable rates of mortgage insurance. So you always got to have that trade-off. Do you want to put 20% down if you're making a $300,000 purchase and have $60,000 tied up in equity, or do you want to put $15,000 down and use that additional $45,000 to have in savings, rainy day fund, use it for your closing expenses, remodel expenses, the different things that you can do with that type of cash in the bank. And then same thing here, VA kind of right in the middle. Obviously VA goes up to 100% financing, so you see the loan to value ratios are always going to be a bit higher with them. Credit score kind of falls in between where we saw conventional and FHA. That is the end of the Insight Report. Again, big things to take away from it is that there is no reason to expect a 40+ day transaction time on a purchase mortgage. Also, interest rates right now, though they have climbed into the upper 4s, still aren't that far away from where they've been over the last year or two, even though we do expect them to climb going into 2019. If you wish to see how this information can apply to you personally, please don't hesitate to reach out. There's going to be a message now button at the end of this video or below your screen here. And also you can reach me. We can connect on Facebook at facebook.com/easyazmortgage, or always visit me on my website, brycethebroker.com. Feel free to shoot me a text, 480-287-3492. Again, this is all just kind of macro, broad information. I'd love to be able to show and get an evaluation and consultation done on how this applies to you personally. Thanks again for taking the time to go through this, and I will see you guys soon. Take care.